Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks slide as a tech rout in the U.S. sparks a rapid rotation into cyclical sectors. Oil rising for a second day as tensions resurface after the U.S. shoots down an Iranian drone in the Arabian Sea. But U.S. President Trump reiterates diplomatic talks are still continuing. Plus, it's day 2 of the World Government Summit, and we're joined by Stephen Pagliuca from PagsGroup and Oleksandr Komarov, the CEO of Ukrainian telco Kyivstar. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. A bit of a shakeout yesterday for markets. Wall Street ending in the red. The Nikkei, the Nasdaq, I should say, plunging around 1.9% yesterday. This on an announcement by Anthropic that they've come up with a tool that allows for legal services to use some of the software that they've come up with in a more efficient manner. So essentially, they've come up with a competitor to some of the existing software out there. And why am I bringing all of this up? Because it was the catalyst for a major sell-off in some of those software names, software as a service. So the basket, a basket that tracks that index, was down about 6% by the end of the session yesterday. And it tells you that you just don't know where the surprises are going to come from when it comes to markets. But yesterday, it was actually a disruptive announcement coming through from Anthropic. That was the catalyst for the sell-off. Today, what we're seeing, though, is things are stabilizing somewhat. The Nasdaq is only down about 7 basis points. We do have a bunch of earnings to watch out for today as well. We've got the likes of Alphabet, AMD, and Qualcomm all reporting. Alphabet, obviously, the major outperformer in Magnificent Seven last year. So we'll see whether that momentum will continue into 2026, especially after yesterday's price action in software. Brent today climbing about 0.8%, and that on more provocations in this part of the world. The U.S. saying that they shot down an Iranian drone that had approached an aircraft carrier in the Arabian Sea. But President Trump saying that the talks are still continuing this weekend. That being said, the region is on high alert, and obviously the fact that they shot down a drone was significant. Oil up 0.8% this morning. Gold also, once again, climbing again, regaining some of the ground lost, up 2.7%. We're back above $5,000. So a bit of a historic collapse, and now we get the rebound. Yesterday we climbed more than 7%, and today that momentum seems to be continuing again. I guess one of the big questions here is whether those speculative buyers and the Chinese buyers that we spoke about will come back in to support this market, in addition to retail, who recently got involved as well. And then Bitcoin, take a look here. Some stabilization coming through. We're around $76,000, about 0.3% firmer. But I will tell you that Bitcoin is actually trading at the lowest level since President Trump took office. It is down 13% this year and down more than 39%, basically, but down 40% from its October 6 peak of $126,000. So it has not benefited from the flight to safety or the flight because of geopolitical concerns and policy concerns into some of those other safe havens that we spoke about, and is not even acting as an inflation hedge. So Bitcoin, $76,000. This I thought was interesting. I just wanted to mark. Tanker rates have been spiking on Iran tensions. So this is the rates of tankers that are passing through the Arabian Sea, through the Strait of Hormuz. As you can see, in the past couple of weeks, there has been a massive shoot upwards, and that is namely on back of the higher costs and higher insurance costs that insurers are charging to many of these tankers that are passing through the strait because of worries about things really escalating militarily. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us. And Min Min, despite, I guess, some of the pullback that we saw on Wall Street yesterday, seeing some stabilization in Asia today?
Yeah, some stabilization, but as you mentioned, that Anthropic story really is still shaking markets here after it introduced an AI tool that led to concerns around profitability of software companies across Asia. You take a look at some of these stocks in Japan, in China, in Australia, all of these software stocks taking a huge beating today. And you flip the board and take a look at broader markets. If you look at the benchmarks, we are seeing a bit of a pullback today slightly after the very strong session yesterday. The Nikkei is down by about about 1% here, but part of it is the earnings drag because we have Nintendo reporting earnings, also the Japanese chipmaker Biden also reporting earnings, both reporting quarterly earnings that had missed analysts' estimates. The Kospi managing to eke out a 1% gain, even though SK Hynix and Samsung, the big stocks, are seeing a bit of profit taking, a bit of a dip today, but there's a rotation out to some of the other smaller cap stocks. But again, Hang Seng Tech, I believe we are close to or on the brink of bear market territory. It's down by 2%. There continues to be this sell-off in the Chinese tech sector, especially over concerns of whether or not the government will hike VAT rates on the tech sector, even though Chinese state media Xinhua has come out to dismiss any rumors around that. But also the EV sector, those players are really a major drag on that index as well. Concerns around vehicle sales in China and, of course, the collateral damage from the AI software sell-off as well.
Min Min Lo, thank you so much. That was Min Min Lo with an update from Hong Kong. Now let's go back to the top market catalyst yesterday. A new AI automation tool from Anthropic has sparked heavy selling in software stocks as traders turn bearish on the sector on fears of AI disruption. I spoke to IBM CEO Arvind Krishna, who says that paranoia about competition is valid.
I should be paranoid about competition, meaning can other people do what we are doing in a way that is easier for our clients? Always when there is a disruption in technology and companies get hurt, they don't make it easy enough for their clients or they miss the shift. I don't think we're missing the shift, so I've taken that risk off the table. But if somebody else does it in an easier way, that's a problem.
Pretty timely remarks there from the IBM CEO. Bloomberg tech reporter Annabelle Jewellers joins us from Hong Kong. Belle, just walk us through exactly what we know about this new release from Anthropic and why it was such a big deal for the market yesterday.
Yeah, it's an interesting one. Actually, Anthropic has been sort of making waves for software stocks in 2026, but generally we have seen them under sustained pressure from AI fears. This year, though, Anthropic has released what's called Claude Cowork. Claude Cowork was an early release just a few weeks ago, but overnight they had more capabilities that were added to it. So it's being marketed as a type of AI agent, and these legal capabilities have been also written into it now, so it can do things like automate work like contract reviewing, legal briefings as well. And so the issue here is for legacy software companies in the legal space, it really challenges their traditional business model, that software as a service business model, because that's had recurring revenue streams. It's been really big profit margins as well, and an investor favorite. But what happens when you have these new AI tools that are coming to the market that essentially can be written by AI and with very little human involvement and can be heavily customized as well to each business needs. And that's the real risk here. It's also interesting because Anthropic is particularly disruptive given that it builds its own models. It can be customized, as I said, for the industry-specific needs. And that also makes it a leg above traditional, well, not traditional, but other AI tools that we've already seen for the legal market space, the likes of Legora, for instance. Harvey AI has been very popular, but they're actually based on Anthropic technology. So Anthropic is now coming to the market with its own services as well, and that is really what caused the big disruption overnight.
Belle, thank you so much for breaking it down for us. Annabelle Jewellers, our Asia Tech correspondent. Well, for more market insights, joining us now is Haig Bathgate, Callanish Capital CEO. There is plenty to talk about, but maybe let us start with the sell-off overnight as well. I mean, you know, for those of us who are not following the intricacies of the market, it perhaps did come as a surprise that you saw such a disruptive announcement come through from Anthropic. But actually, I mean, this is the nature of tech, isn't it? I mean, we saw it with DeepSeek last year. We had that DeepSeek moment. You had the launch of Claude Codes, and these things are happening at a very quick pace. But I guess as an investor, it just makes your job of discerning the winners from the losers a lot more difficult. Yeah,
I think that's right. I mean, I think it's a big feature this year. I think what's quite interesting is just how quickly they're developing some of these software applications. So Coworker, the development cycle was 10 days. So the markets are going to have to get used to this because this disruption is probably going to be happening on a sort of 10-day cycle, I think, every month this year. So I think what's interesting as well, it's just starting to have this more contagion effect across the sectors. So we saw this with Microsoft now seem to have joined the software as a service sort of vulnerable group. So I think it's pretty indiscriminate. If you look at someone like Microsoft, I mean, they're already talking about opening their ecosystem up to different LLMs and so on as well. So it does feel quite indiscriminate, and it does feel quite noisy. So I'm not sure. I think this will be quite a short-term feature because it's going to be around.
Yeah, I mean, ultimately, though, does it change the long-term thesis in investing in companies that also offer software as a service?
Yeah, I mean, look, I think it's too dangerous to try and pick the winners and the losers because you just don't know at this stage how it's going to be. And obviously the market just doesn't like the uncertainty, so it's just treating it as a broad-based group selling off. I think what's quite interesting is you're starting to see things like US sort of mid and small caps starting to respond quite positively this year. So that's probably the safest way to play the disruption theme, is as you start to see it feed through to profitability and productivity, rather than trying to work out, which software as a service is going to be the winner and loser out of this, which is, sort of playing with fire. Try and play the second order effect of who's actually going to benefit from the efficiencies.
From a productivity standpoint, yeah. And then you also mentioned something about just the rally potentially broadening out this year too, with the backdrop of perhaps a semi-resilient U.S. economy so far. I mean, are we likely, do you think, to see more broadening of the rally away from just tech?
Yeah, well, I think everything's been so noisy this year already. I mean, you've seen, obviously, commodities, silver, gold. But what we're actually seeing is probably quite a good glide path for the U.S. economy now. So you're now looking at, probably a better outcome in terms of Fed independence than what we maybe initially thought. We're now seeing a kind of more gradual glide path of, stagnant rates or falling rates. And just some of those fears around sort of inflationary pressures that we were seeing at the tail end of last year are starting to wane. So actually, it's more of a benign economic backdrop and probably a bit more supportive of kind of more stable markets.
Yeah. Do you believe that the Fed are going to end up cutting twice or three times this year when the market's pricing into?
Yeah, the market's is such a, who knows is the answer.
Yeah.
I think we just have to see. I mean, it's quite data dependent. And I think because it's so politically contentious, if you're a central banker, you're going to absolutely fixate on the data points because that's a statement of fact. It's not a statement of politics.
Yeah.
So I think any incoming, Fed chair will be quite careful in terms of how they characterise things and what data points they're going to focus on as being a catalyst for rate decreases.
And what do you make of this? The whole thesis around sell America or U.S. exceptionalism being over. It comes up from time to time, but I mean, the only way it seems to be expressed these days is in the USD, not in other U.S. assets.
Yeah, look, I think I mean, the US is the driving dominant force in terms of AI at the moment and will remain so for some time. And obviously China are catching up. If you want to have exposure to, to that part of the market, which is the part of the market that's causing the disruption, you have to be exposed to the US. I think also even with things like EVs, that's shifting a bit back towards the US now because it's now about autonomous driving, and we've all seen Grok embedded in Tesla and so on as well. So, are you going to trust a Chinese AI model to drive you around, or do you trust the US model? So, yeah, I think it's a continuation of the same theme, and obviously these questions arise around this time of year every year, and the US kind of continues to power on.
And how are you feeling about the prospects for Europe this year as well?
Yeah, I mean, it's looking pretty grim, isn't it? But I mean, it always does. So, maybe it's a kind of classic, kind of value rebound that you get.
And stock markets did okay last year, especially in the periphery nations.
Yeah, that's true. I mean, yeah, from quite a low base. Yeah, I mean, look, it's very European market dependent. Obviously, in the UK, you've got big exposure to commodities. You've got a lot of Chinese sensitivity in some of the European names. So it's quite sector specific. I can't get overly excited about European economies, but some of the companies in Europe, obviously, global leaders in things like luxury.
Okay, where are you excited to put your money this year then?
So I mean, it sounds very boring, but we were too early on this, so we got it wrong last year. But US mid and small cap, I think we'll start to see the implementation and the disruption that everybody's been talking about for the last 2 or 3 years start to feed through to productivity. Now, probably that leads to excess profits in the short term, and then there has to be some sort of redistribution effect. And also, I think we probably get a broadening out, as you were saying, of the rally. So look, you don't have to be in the US to benefit from those tools. And there are more and more ways of implementing those productivity gains. So I think we start to see some mid and small cap companies start to perform this year.
Haig, thank you so much. Lovely to have you on.
Thank you.
Haig Bathgate, Callanish Capital, CEO. Well, the partial U.S. government shutdown has ended after President Trump signed a funding deal negotiated with Senate Democrats. The agreement extends Homeland Security funding through February the 13th, while the rest of the government is funded through the fiscal year. Some conservatives backed the deal after pressure from Trump, while several Democrats opposed it over immigration concerns. And coming up, Donald Trump says talks with Iran are ongoing. That is despite the U.S. shooting down an Iranian drone approaching an aircraft carrier. We'll have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Donald Trump has reiterated the U.S. and Iran are maintaining diplomatic talks. That comes after an earlier skirmish in the Arabian Sea spooked oil markets. The U.S. Central Command says a U.S. F-35C warplane shot down a drone that, quote, aggressively approached the USS Abraham Lincoln with unclear intent.
They are negotiating. They'd like to do something, and we'll see if something is going to be done. They had a chance to do something a while ago, and it didn't work out, and we did Midnight Hammer. I don't think they want that happening again, but they would like to negotiate. We are negotiating with them right now, yes.
Joining me now is Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Onur, well, at one point yesterday evening, it was looking a little fraught and unclear what was going to happen after the U.S. announced that they had shot down that drone. But it seems like the negotiations are still on. They're still on track for this weekend.
Yeah, that's correct. But what transpired over the last 24 hours, I think, highlights how volatile the situation is. As you said, on the one hand, you had Trump and also the White House press secretary saying that talks between the U.S. and Iran are still being scheduled to take place later this week, very likely on Friday, possibly in Oman or maybe Istanbul, but the final decision on that seems to have yet to be being made. Mm-hmm. So I think the most critical situation is that while everybody was expecting the talks to continue, that was taken as a sign that the war between the two sides was not inevitable, and we have seen the impact on oil markets, as you mentioned before, earlier in the week. But then the drone incident happened. An Iranian drone was shot down by a U.S. warplane after it came close to the USS Abraham Lincoln, which has been in the region for some time now as part of the big U.S. Armada. Now, the most important issue right now that authorities are trying to sort of nail down is the agenda of the talks between Iran and the U.S. On the one hand, a key U.S. priority is to talk about nuclear enrichment. But for Israel, the U.S.'s biggest ally in the region, talks should also include the Iranian support for proxies in the region, as well as Iran's missile stockpile. Yeah. And we are seeing signs, indications that for Iran, talks should be kept narrow and should be kept focused on the nuclear enrichment issue alone. So even this just highlights how critical it will be for the two sides and the mediators, global regional powers such as Qatar and Turkey, to try to nail down the lowest common denominator between the two sides to be able to agree to talk to on Friday and possibly beyond to avert the war. And that is the sort of critical sticking point between the two sides going into talks later this week.
Yeah, let's see how it goes. Onur, thank you so much. Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Now for a look at some of the other stories we're following today. A standoff between the White House and Iraqi politicians over who should be the Iraq's next prime minister is worsening. The U.S. told Iraqi officials it would reduce the country's access to oil export revenues if it appointed Noor al-Maliki as premier. Washington is trying to sever Iran's influence over Iraq, with the U.S. concerned that al-Maliki is too close to Tehran. Libyan officials say Saif al-Islam Gaddafi has been killed in the town of Zintan. A lawyer for the son of Libya's late dictator, Muammar Gaddafi, and a representative who worked with him confirmed his death in a post on Facebook. The representative cited a report that armed men killed him in his home. Coming up, Ethiopia returns to double-digit growth after a wave of IMF-backed economic reforms. We'll discuss that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, Ethiopia is set to return to double-digit economic growth this year as IMF-backed reforms help ease foreign exchange constraints and strengthen exports. For more, we're joined by Bloomberg's Fasika Teresi. Fasika, good to have you with us. So what are some of these key reforms that Ethiopia have introduced that seem to be really working and driving some of the success of the country right now?
Thanks, Joanna. Since 2018, Ethiopia has been implementing various economic reforms, shifting from a tightly state-led model to a more market-oriented and private sector-driven economy. So one of them is the partial and full privatization or liberalization of the market, such as opening up the telecom sector for foreign and private sector, and also the banking sector, and also the areas that were close to foreign investment have been opened, like the real estate and retail market. The other major reform was the liberalization of the foreign currency regime, where that was very controlled by the central bank, but now the local currency is freely traded in the market. So that's also what the other major target, that the major economic reform. And also Ethiopia has now a capital market, which was lacking for over 50 years now. And the other reform is the tax revenue mobilization. So the government is trying to broaden the tax base and increase revenues from tax incomes.
Okay, so it's a really positive story on reforms, but at the same time, they're still engaging in talks around restructuring with some of their key bondholders. What is the latest on those talks?
Yes, Joanna. So beginning of last month, the government has announced that it has reached agreement of principle with the $1 billion Eurobond holders on terms, and they were about to sign the deal. But recently, we've heard that the official creditors committee has said the agreement with the private bondholders is not comparable with the common framework agreement. So the government said it's withdrawing from the initial agreement. So beginning early this week, the bondholders said there is no way that they will continue in this situation, and they might take the case, or they might take Ethiopia to the court. Yeah.
Okay, so still a work in progress, but fundamentally, the macro on the ground is a lot more positive. Bloomberg's Fasika Teresi, thank you so much for joining us. Well, South Africa is urging the United States to extend its key Africa trade program beyond a one-year renewal. Pretoria says the short extension of the African Growth and Opportunity Act, also known as AGOA, offers only limited relief for exporters and lacks certainty around investment and purchasing decisions. Trade Minister Parks Tau called on U.S. lawmakers to lengthen the duration of the deal, saying it will provide relief to South African products exported under the scheme. And coming up, we are going to be live at the World Government Summit here in Dubai, where we'll be speaking to Steve Pagliuca, the founder and CEO of PagsGroup. That's next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks slide as a tech rout in the U.S. sparks a rapid rotation into cyclical sectors. Oil rising for a second day as tensions resurface after the U.S. shoots down an Iranian drone in the Arabian Sea. But U.S. President reiterates that diplomatic talks are continuing. Plus, it's day 2 of the World Government Summit, and we're joined by Steve Pagliuca from PagsGroup and Oleksandr Komarov, CEO of Ukrainian telco Kyivstar. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. A pullback for markets yesterday. Nasdaq ending the session down almost 1.9% lower. Big declines witnessed in the basket of software as a service. That basket down anything from 6 to 7%. A lot of the names that getting hit after release by Anthropic of their own new AI productivity tools specifically targeted at the legal profession. And so all of the competitors in the space were down sharply yesterday in trading. Today we're seeing somewhat of a stabilization. We've got the S&P flattish. We've got Nasdaq also down about 0.1% as well. Keep in mind that we have earnings to watch out for later today. Qualcomm, AMD, and the big one, Alphabet, too. So that could be a good determinant of price action the next couple of days as well. Brent just shy of $68 here. We're up 0.7%. And no wonder, because once again, tensions seem to be rising up again in this part of the world. The U.S. shooting down the Iranian drone. So that's been factored into the price of oil today. Gold back up about $5,000. We're up 2.7% after significant declines, historic declines, actually, the last couple of sessions. But we are back up again. Buyers seem to be coming back in. And we'll see whether this trade actually can continue to have the momentum that it's had. It's already rallied significantly this year. Same for silver as well. And then Bitcoin, today stabilizing $76,000. But just want to point out that we are trading at the lows since President Trump came into office. And despite the many crypto-friendly policies introduced by the Trump administration, Bitcoin is still trading at $76,000 and has basically drawn down 40% since that high of $126,000 it reached last year. So there we go. That's Bitcoin. And switching over, I was talking about tensions in the region. Take a look at tanker costs. This is the cost for the price that tankers have to pay to pass through the Strait of Hormuz in the Arabian Sea. No surprise there, but these freight costs continue to spike higher on back of, again, anticipated geopolitical tension, in addition to the fact that the U.S. has built up that substantial armada in the Arabian Sea. So the region is really on alert for anything that might happen between the U.S. and Iran, especially militarily. Okay, let's check in on how markets in Asia are faring as well. Min Min Lo is in Hong Kong for us. Min Min, what's on your radar today?
Hey, Jumana, we are zooming in on Hang Seng Tech because it is testing bear market territory. We are watching for the level 5,346. So we are about 20 or so points away from bear market territory. And it's not just the Hang Seng Tech. You have the Starboard in Shanghai. You have the Chinex in Shenzhen. All of these tech stocks taking a big tumble today. The CSI 300 is still flat. There are many factors at play. You have the EV players, a big drag there because of concerns about vehicle deliveries in China in January, not doing really well, especially for BYD. You have the software sell-off globally that is spilling over into China. Concerns about whether the Chinese government will raise VAT on the tech sector as well, even though Xinhua, the Chinese state media, has refuted rumors of raising VAT on the gaming sector. So where's all that money going to? You flip the board, you can see that it's going into things like financials, where you have high-yield dividends being very attractive right now, and you have this white line here, the beleaguered property sector finally getting a bit of love today. You can see the divergence between the property sector and the Hang Seng Tech. It seems like more fund managers are rotating money into the property sector, especially with Hong Kong property, the market looking like it's recovering, and things, more property support from the Chinese government in mainland China as well.
Min Min, thank you so much. Min Min in Hong Kong. Now, the fear of AI disruption in software is not just rocking equity markets, it's also hitting software firms' debt, pushing their bonds and loans into distressed territory. In one instance, a consortium led by Deutsche Bank has been unable to sell about $1.2 billion worth of loans, backing the acquisition of a software provider. The shift is also impacting private equity and alternative investment firms. Blue Owl, which initially focused on financing software businesses, leading the decline, and other asset managers, including Ares, KKR, and TPG, also falling as well. And you can see the losses there are quite significant, down around 10%. Joining us now is Steve Pagliuca, PagsGroup founder and CEO, who knows a lot about this space. I'm actually just going to start with the news overnight and the fact that there has been a significant amount of disruption to software as a service, and you're seeing it translated to other parts of the market. Those alternative investment firms, those PE firms that have provided financing to some of those software as a service initiatives are really feeling the heat this morning. I guess the takeaway here is you have to be a lot more discerning about where you're putting your money into in this very fast-moving world of AI.
That's absolutely right, Jumana. It's great to be here. Software as a services has been a great growth area and a stable area, with the theory being that it's very hard to rip software out. I think AI has now turned that around, in that AI has moved from, let's say, an experimental stage to an implementation stage. So with the Anthropic announcement, that they can actually build software and do some of the things that you'd buy from the outside services has rattled the markets. I think it's probably an overreaction. It's going to take a while, but definitely the general rubric of you can just buy any software company because it's sticky, that's going down now in the face of the productivity and AI substituting for that, and companies being able to do that on their own.
Yeah. Let me ask you, as it pertains to the PE market, and I guess you get this question all the time, but what is your outlook for exits in 2026? Something that, again, has been holding back and swirling around the industry for several years now.
Well, we've seen a lot of interesting exits. Certainly, Bain Capital has had some great exits going public, companies like software companies that they have, and that's starting to pick up. I actually see a pretty good upcoming year, because it's incredible that the Magnificent Seven are spending over $1 trillion in this software infrastructure and data farms and all the things that are needed to implement AI on a large scale. That money ratchets through to all the other companies. I'm on the board of another software company, chip company, that is increasing its spending from $200 million in CapEx to $1 billion in CapEx to fulfill that demand. And so that demand is going to be there for the next year or two. These companies are very strong. They have lots of cash. So I think that's going to buoy the economy.
Yeah. Let me ask you, you're speaking to us from the World Government Summit. I'm heading down there in about 2 hours' time. What are the opportunities you're eyeing up in this part of the world?
Well, this part of the world has been a leader in investing in biotech and tech and AI, and a lot of the money coming in from the oil has fueled the growth of those areas. So they've been very strategic and very smart in backing companies that will kind of revolutionize life and implement AI in many, many businesses. And again, I think we're now getting into the phase where AI is going to reduce costs and increase productivity for industrial companies, for transportation companies, entertainment companies. And the region's been very smart and put lots of dollars behind those areas. They're building biobanks. They're using the power of that money to invest in high growth areas. Energy is another example. These data banks that they're building require enormous amounts of energy. That's going to pressure the grid. So they're looking at investments in things like solar power increasing, nuclear power, fusion. All those things are on the horizon. So this massive build of AI infrastructure is ratcheting through the whole economy, the global economy, and the region is right on top of that, and it's been out ahead of it, actually.
Yeah, it's interesting that you bring up the energy aspect, because it is a one distinguishing feature of this part of the world as well, just the plentiful energy sources, be it renewable from the sun and obviously hydrocarbons as well. And I wonder whether, when you think about the AI landscape, particularly in the US right now, whether you do foresee obstacles when it comes to the provision of energy to power all of those AI ambitions. Is that ultimately going to pose a bit of a bottleneck to the speed at which we can keep progressing?
Yeah, energy can definitely be a bottleneck, and now there's a battle to secure that energy. But there are many, many new technologies, like fusion is going to come online in the next 2 to 3 years. Small nuclear plants to power these things. Google and the companies are signing, energy, and they're really a fight for that energy. The real risk will be, will prices go up? Can they really increase the grid capacity fast enough? And that remains to be seen. But there's a scramble to secure these energy sources for sure. And again, that's going to create its own positive effects on the economy as people build more solar and more specific plants to power these data centers.
Steve, always good to talk to you. Thank you so much for coming on the show. Steve Pagliuca, PagsGroup founder, chairman, and CEO. Well, coming up, we're still live at the World Government Summit here in Dubai, where we'll be speaking to Oleksandr Komarov, the CEO of Kyivstar, on Ukraine's economy and critical infrastructure. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Trilateral talks between the U.S., Russia and Ukraine are set to resume today in Abu Dhabi after several rounds of diplomacy failed to end Europe's deadliest conflict, a war that has severely impacted Ukraine's economy and critical infrastructure. One company operating at the heart of that disruption is Kyivstar, one of Ukraine's largest telco operators, which has kept networks running through the conflict and is now looking ahead to recovery. Joining us now is Oleksandr Komarov, CEO of Kyivstar, from the World Government Summit, obviously here in the UAE, where those talks are once again taking place. Let me ask you, sir, as you know, looking back, and this is a war that has been going on for almost 4 years now, do you feel that we may be approaching a breakthrough? Is there hope that these talks actually will yield to something substantial?
It is definitely a hope in the air, okay, and I hope that we are moving toward the peaceful, stable, peaceful resolution according to the international law and Ukrainian interests, okay, and this will be, you know, sometime, you know, ended. You know, I don't think that it will happen very, very soon, but I'm glad to see that there are certain negotiations, conversations, and meetings are in place.
As a corporate that operates within Ukraine, is it too soon to start thinking about the day after the war and sort of making contingency plans for that?
I don't think that it is, you know, it is never soon. From my perspective, we should be focused on now, okay, and we are doing a lot in order to achieve very, I will say, impressive results now, even during the war. And of course, this will make us much better prepared, okay, for the future peaceful resolution and the potential recovery, investments into the recovery, reconstruction of Ukraine. So we are not waiting for, so we are building network, we are strengthening our resilience, so we invest a lot into the energy, redundancy, we are updating, modernizing our network from the LTE to LTE advanced. We are running 5G pilots, and we are transforming Kyivstar from the telco operator into the digital service provider, okay, in order to ensure a kind of strategic evolution of our business into the new era.
Yeah, and can you give us some color on perhaps some of the companies and investors that are engaging with you and with, you know, these talks more broadly around reconstruction?
As you probably know, Kyivstar listed in August last year, and it was first Ukrainian, pure Ukrainian company listed on the American Stock Exchange, in our case on NASDAQ. Okay, so we see quite great interest from the international investors. Okay, so we already have a quite big share of the institutional and private investors, okay, who are our shareholders. It was just recently confirmed by our secondary public offering that was overbooked 5 times versus our initial proposition. So I think that we are on the right way. We see our role is to open door, to give example to the Ukrainian business, okay, that even despite the war, okay, the access to the international financial markets is open, and I'm glad to see that one of the Ukrainian biggest agriculture and food producer just announced a Eurobonds. It's the first Ukrainian private entity Eurobonds during the war, and I'm absolutely sure that Ukrainian companies will follow us, and we will see further listings on the European and American stock exchanges. Okay, so I think that we are on the right way, and at the same time, we provide a bridge. And at the same time, we provide the bridge for the international investors to Ukraine. Yes, please.
You provide a bridge to the international investors into Ukraine. What did you do with the proceeds of the listing from on the NASDAQ last year? You just referenced it, obviously.
Kyivstar and VEON, the biggest Kyivstar shareholder, announced a very ambitious program to invest $1 billion in Kyivstar and Ukrainian economy. Okay, and what we are doing by investing in 3, let's say, major focuses. The first one is resilience and redundancy. The second one is our transformation from telco business into the digital service provider, and we are already not just a leader in mobile and fixed broadband. We are a leader in ride-hailing, we are a leader in entertainment, we are a leader in digital health in Ukraine. So we are preparing and rebuilding ourselves to provide a broader digital services to our customers. And we are investing in to the energy, into the renewables in order to, let's say, mitigate some energy supply risk, rising prices. You know, these are three main focuses where we are investing for the time being.
And I see that Kyivstar is also partnered with Starlink to operate in Ukraine. Would you say that Elon Musk has been a good partner in this war?
Let's set up the scene. So SpaceX consists of two different consumer and businesses. So they are providing Starlinks as a kind of fixed broadband through satellite services and direct to cell. Direct to cell is a service from the standard LTE device to the satellite. For us, it's a pure commercial relationship, which is based on a long-term agreement between Kyivstar and SpaceX Corporation in order to develop and commercialize these direct-to-cell services in Ukraine. We are actually just the 5th global market to launch and the first in Europe market to launch direct-to-cell services. And I'm proud to say that, especially during the war, in one day, in November last year, we launched a kind of backup for every Ukrainian with a 4G device to communicate in a very difficult situations, to communicate during the long-term blackouts. So for us, it's one of the most essential emergency technology that we launched during the last year in order to support Ukraine and Ukrainian people.
Sir, thank you so much for your time. Oleksandr Komarov, the CEO of Kyivstar, live with us from the World Government Summit. Well, in the last few minutes, we've also got some earnings dropping from UBS. I'm going to bring you the major headline here. UBS has said it's going to buy back $3 billion in its own share in 2026. It aims to do more. So that's on the buyback plan. As for the actual numbers, fourth quarter pre-tax profit, $1.7 billion. It is a beat versus the estimates of $1.46 billion. Fourth quarter net income, $1.2 billion. Versus estimates of 966, so it is a beat on the bottom line. As for the individual units, the fourth quarter investment bank came in at pre-tax $640 million versus estimates of $468 million, so another beat as well. As for other sides of the business, the fourth quarter global wealth management net new assets came in at $8.5 billion. This is actually a miss versus 27.39 billion expectation. And their guidance, they see low single-digit percentage decline in global wealth management NII in the first quarter. So some guidance there around what's been going on in the global wealth management business. But ultimately, they see healthy capital market conditions, the pipeline looking good, expect net saves to build progressively. That is weighed to the second half. And on that particular topic, cost-to-income ratio is about 67% target in 2028. They're also targeting 18% return on tangible equity capital, tier 1 capital, I should say, in 2028. So those are the numbers that have come through. And our colleague, Francina will be speaking to the UBS CEO later on today. Plenty more ahead. This is Bloomberg.
A couple of things. First, I think there is now a lot of progress to your point on that front. We see that lots of this infrastructure, some of it is here already. As you know, we as Microsoft as well, we got licensed and we announced this back in November, and that's enabled our infrastructure. But also, I think lots of discussions happen around the GPU, but that's one layer of the AI. Where we see a lot of innovation happening is at the application layer as well. This is where, to your question around the outcomes that improve people's lives, that's what we see it. And that's the piece that we see a lot of across the UAE, across the government and other sectors that help with the utilization of AI within UAE and accessible to outside.
Yeah, so UAE has an ambition to become an AI global hub. Where does the UAE stand in global adoption, in adoption of cloud versus other jurisdictions around the world?
So right now, and a couple of weeks ago, we announced the AI diffusion, the global AI diffusion report. Yeah. UAE leads the world at 64% in terms of the AI adoption, which means that literally 6 out of 10 people in UAE are already using AI. But the piece of data that stands out is the trust in AI. 67% of adults in UAE trust AI, and that's back to the outcomes that improve lives, where people feel that, one, there's a sovereign infrastructure that is secure, that people trust its security and privacy. Two, there are outcomes that improve my life and government services.
Yeah. One of the other announcements that Microsoft made back in November, and I spoke to Brad Smith about this, is you're investing to train up to 1 million people in the UAE with digital and AI skills by 2027. Why is it important for Microsoft? It's veering outside your usual terrain of partnerships.
Absolutely. We see this not only important, it's integral in making sure that AI is utilized and realizing these outcomes that we need. And that's why we're taking this bold ambition together with the government to train 1 million people, by the way, by the mid of 2027, because we believe that we even need to do more and faster together on that front. That is one of the key factors in the framework that we see of how AI gets utilized in a country. And that's the playbook that is being developed here in UAE right now, and we see being deployed or could be repeated across the world.
That was Amr Kamel, General Manager at Microsoft UAE. And that is it for Horizons Middle East and Africa. I'm Johannesburg in Dubai. Stay with me, though, for another hour. I've got Daybreak Europe.